I'm gonna be honest. I think I just missed my trade on this one. But let's see. I believe my entry point was here. I'm gonna explain the trade in just a second to make sure everyone is in the stream. So let's see. This was actually invalid. So what I actually want to see, I'm gonna mark this up as a 1 hour low. As far as the 50%, price already reached the 50% within this candle's range. Now from here, given this area, price could still be bullish. It just might retrace back down into this area. Our 1 hour low, the only thing is our 1 hour low hasn't been swept to really confirm this as a true valid active CRT candle. So that's just something to look for while this trade is ongoing. So I really want to see this low swept because this is a bearish candle. But if you go to the 2 hour, or actually let me take a look at the 30-minute, you already had this candle in motion, but this candlestick would have already been fulfilled by now. So which means that this candle likely filled somewhere around the 50%, and that was enough for this candle range to be complete. And so now it is beginning to operate within a new range, but so far we have to wait for full candle closes to really tell what we're doing next, because here our momentum is overall bullish, so that's what we want to look for. So realistically, in a best case scenario, what I want to see is this 2 hour candle close in 46 minutes. So it'd be around 11 a.m. So around 11 a.m., I really want to be able to mark this candle as a 2 hour CRT candle, because then like here, this candle would just be a regular closure, but that does not mean that the next candle after that follow along with the 2 hour candle momentum after it sweeps the low. So what I mean is, what I'm really looking for on a larger scale, let me just clear them off. Looking for this low here. I am on the 2 hour. And then this to be the high. Now, I'm not really going to draw out the 50% yet because this candle is not even confirmed. So I'm going to wait before I draw that until this candle actually closes. So once again, we have another 45 minutes until this candle close. So it'll be really a test of patience. As you can see, the thing that makes me actually want to wait is because, just like I said here on the 1 hour time frame, I said that when I had previously, I had out my 1 hour CRT drawn out with this low to this high, and I said that I won't really count what the move did so far as valid because I want to see it sweep with this low. And this candle is the same candle that is active on our 2 hour if we have a close, because this candle shows signs for now. Shows signs. See, that's the thing. It shows signs for now that price is still going to be bearish. Well, not that price is going to be bearish, but it's going to close bearish, which means it's going to give us that bearish candle, and a bearish candle is what we want to see. On the higher time frames like this, I'm not really getting anything valid or any, valuable information from here. So that's why you just continue and go top down. But first thing I notice, if we get a candle closure here and then price does come back down, sweep this low, it'll have a high probability of going all the way higher. But once again, it could have already potentially reached that area, and I could be already late on my whole entry, which is what I think I am. It's a good possibility, because this 1 hour candle, even though it didn't sweep this low, it still could have showed enough intent in price when it swept this low to show that like it's going to reject from this area, and I missed my entry. My prime entry would have been here. That's where I should have took the entry. And so far, I feel like if I take an entry now, it'd be just far too late, and it'd be a waste of a trade. Or it'd be for sure it'd be a forced one, and I don't want to force the trade at that point. So all I can do now is just keep waiting. Let's see, could price even come back lower? I don't know. It honestly looks like price may already be on his way towards these highs, to be honest. Let's see. You had the 50% somewhere within here, price tapped into. Let me make sure they realign. So you wouldn't actually have this label. You would actually have your 1 hour label. All right. And then you would have just been pretty much monitoring price as it rejects here. You would have to be on the lower time frame. This was likely a time frame like this. This is what you most likely had. And so your best entry opportunity would have been at 10:01. And I feel like I missed it. So anything after that will be a forced trade, and it wouldn't be in full alignment with what price is actually trying to do. And if today is a no trade, then that's just gonna be perfectly fine. I don't want to force a trade, even though price is going my direction. Like I was looking for price to actually be bullish for the day, and price is being bullish for the day. USDJPY was the pair that I was looking for of trading. And it seems like the 1 hour CRT that I first had drawn out is about to play out. It's just, here it is. See the 30-minute. Even around here, you can still technically have had the 30-minute lined up. Then this still would have shown your accumulation. Let me see. Accumulation here, manipulation, expansion after you get this candle close. So like I was saying, it's pretty much as soon as I started up, I knew I missed my entry. I just didn't want to force it. I would have had something like this here, targeting a 1 or 2, then potentially higher with these highs being here. Let's see here. And I would be in this trade, letting the 1 hour CRT high candlestick actually play out. Let's see. And yeah, as far as my maximum area go, it would be this high here, targeting this maximum area of liquidity, because price already committed and shown that that the overall direction that it wants to go in is going to be, in this case, bullish. Price already shown that the bull momentum has began to take over on the 3-minute time frame. Let me maybe go down. Maybe the 1 minute shows it best. Yeah, it does, to be honest. Because you would have one here, accumulation here, price manipulates. And in this case, since there is no extra internal liquidity to collect on the left, you see this is just one solid candle. Once you have this area filled, so this is pretty much the oddball sense with when it came to this area, because this low was not swept, but once price made it, it came this close, right, and then rejected previously. So you could have still had your area of manipulation here being this candle because it came close. Then just understanding once you get these closures here, that's price showing that it has enough momentum to pretty much resist from this area and begin targeting the high of the CRT candle that was laid out here. So here, and then we will have our expansion here. And where's my arrow? From that point, you were expecting higher prices. So from this point on, really, I mean, I don't happen to see a re-entry opportunity that formed at all, so I'm just not going to force a re-entry point within this area, because like I said, once again, I missed this entry. So, but this is pretty much what I would have drawn up. Honestly, this is probably not really even what I would have drawn. Necessary. Hold on now. So yeah, I feel like from this point on, price has now already pretty much confirmed its directional intent to be targeting these highs above. And man, just one of those trades where you just gotta stay patient, you know, don't overtrade. Or not to even say that I overtraded, because I didn't take a trade, I missed my trade. So just gotta acknowledge that I missed my prime A+ entry area, and I don't want to force it. But it is still early in the session. Maybe price shows me that it wants to do something else at a slightly later time. Whenever I'm very focused in and I see a new opportunity potentially forming or a new potential bias forming, okay, I might see something here. I might actually shift my bias here. Shift things up. And if I do that, I'm gonna just leave this. But what am I see. This was the actual previous trade I took. Imagine actually holding all the way up here, because the stop loss would have never got tapped out, but I exited that area, and that's actually crazy. Here, let me just clear everything off so it's not a messy chart. Starting from the daily, there's nothing really here. 4 hour. The thing is, okay. Overall, EU has been bullish. It is going within previous. I feel like you have to go based off of this area, no? Get your last previous expansion area. Mark out your high from here. Here. So price came here. Tapped within this area. Okay, the lows was not swept here, so this means this area wasn't completely strong. It could either hold or price could come back. But it really depends here. It might actually hold, and then what might happen is we might be having a bearish CRT formation form, and then price still remains to continue up into these highs. But that's if this actually holds for the next 25 minutes or so. This here, CRT low, mark the potential high. So this will be what I have lined up for now. I'm thinking the 2 hour, so even if price comes to this area, the 2 hour will still close bullish, which is the extra sign. Thing is, this 3 hour really makes me unsure. Just because if this 3 hour, whether if this holds or not, then the price could come back down and collect this low that it actually formed. Let's see. I feel like we just have to see. Price might want to collect as much liquidity it can around here. So I might sweep this low. Let me actually get focused. Let's see. deciding to switch my bias. Let me see here. So yeah, I see like I pretty much missed my previous go-to trade. So it's like anything after this is like low worst case scenario, because even here, this was the other pair that I had as valid. You would have had this 3-hour candle. Well, not 3-hour candle, this 1-hour bearish candle. You had to sweep it at low. Now price is potentially targeting either the high or it's likely targeting the 50%, which is somewhere within this area. And let's see. Accumulation, manipulation, expansion. So price could have, see, my best entry window time frames would have been around here, and I missed them. But let me see. Thing is, this area will have to be an area that holds, because I feel like what price actually did, when I look at this here, I think price is not gonna target this high. I feel like there might be going to be rejection around the 50%, which is here. So price already tapped into the 50%. So what I'm looking to see is, I'm just tag it out like that. Price is more likely to, since the momentum here is so bearish, even here is bullish, but then you come back here, yo, so I was just analyzing, and so slow. So for right now, I'm thinking this price is going to be more likely bearish. Right here, 1 second. Bearish. Depending on this candle range, because this candle range has already just reached the 50%, and we already had a perfect sweep of this low. And let me see, going down. So, and then you will have your, you had your 3 phases already here on the 1 minute time frame. You will have to go very low to actually see this particularly clear as this, but you do have your accumulation here. You have your manipulation. Price came down, swept the low of this same previous 1 hour candle. Let me see, let me just bring this closer. And then once price began to close back above this range, that's when you had the beginning of the expansion, and then price will begin to actually target either the 50% or the high within the range. But I actually missed this primary entry area of the market. Pretty much, if I would have taken entry here, I would have been slightly late. I would have been around here. So at this point, I just let the trade go. But the primary entry point that you would have had, like the first entry window, would have been As soon as you got this secondary bullish candle here, could have put your stop loss somewhere underneath this low, either here, or you could have did maximum here, just because there is a small amount of liquidity that sits here. So actually, yeah, so this would have been your full range of manipulation here. You would have had your full range. Price came down here, started to reject and show buyers take back into the market here. Once you got this candle closure at 10:02, this would have been the best time to enter. And then from here, you had your take profit, one being that 1 hour bearish candle, CRT 50%. Or then you have your full take profit at the 1 hour high, pretty much being up here. And then you have a maximum area of liquidity as well that you could potentially look to target, being this high here. So the thing is, the whole pretty much point with CRT is understanding the direction of the market. And so the thing about what we understood from this point is that from here on out, the market should be targeting highs, right? We already swept the lowest low possible. We pretty much made our low of the session, and price will now again begin to target our highs. So first we had our 50%, and we do have some minor highs in this case that sits here. Okay, this is a minor high. So what this means is that by this being a minor high, price might have some sort of small rejection and then just come back down and collect more internal liquidity here. And then let me try to draw out some arrows. Actually, price might give a small retracement and then continue ultimately targeting these highs, depending on how price blows through. Like, once again, price could completely blow through this area and just target our highs. And it was really unfortunate that I missed my entry opportunity on this trade, because like as you can see, the time frames, well, not the time frames, but the pairs that I have green are pairs that were actually in alignment with my full divergence. This was actually a red candle. And then so by my strength with my divergences, so what I mean is from the DXY, right, I was actually looking for prices to actually go higher, because on the DXY, as you can see, we actually have our 1 hour sweep here. So when you pretty much pair both of these up, like let me go down, right, you see that right now price is around the 50% from the 1 hour CRT range as well. Let me just pair this up real quickly. You can see price pretty much, we just tapped into the 50% within this range here, 50%. So now the key with pretty much understanding this DXY alignment is that the DXY shows more weight over anything that we see on the market. So just off of knowing that, right, once you go here and you see pretty much the same 1 hour, let me go back to the 1 hour candle, you see the same 1 hour candle formation starting here. And then, like I was saying, when you go back, you see the same 1 hour formation candle on USDCHF in this case. which was actually in alignment with DXY. And so that if DXY is showing the same 131, let me go back. If DXY is showing the same 1, 2, 3 cycle of accumulation, manipulation, expansion, then so should the other pairs that you're trying to look to trade that CRT candle on, right? Now, I'm gonna lie, that's extra sauce that I didn't really even teach yet on my YouTube channel, so I haven't really went very in depth into candle range divergences, but this is pretty much what I just did here, right? Yeah, so the best time to, so the thing about this is you have to observe to pretty much find the best time to enter the market. And around this candle you had, so things have to be confirmed on the DXY before it's confirmed on any other pair, right? So once you see that we had this candle closure, that we had our minor accumulation, right? We had our stab lower into this area, and then you started to see what price did within that pool, right? So the way that you can look at manipulation is you can look at manipulation as a pool of liquidity, right? So your phase 2 most likely would have been somewhere here, and then your goal would have been to wait in real time and actually see if price begins to keep going down lower. And then if it keeps going down lower, this area would have completely been invalidated if you would have had something like this, right? Price would have kept going lower, this whole area would have then been invalidated. But what you actually started to have was you started to have price stab into this area and then begin to show stronger momentum back on the buy side. And then in this case, you don't actually have a quick retrace, you actually have a larger extension, and then you have your minor retracement, and then the market is more than likely going to keep going higher from this area and target these highs as well, because it's already set in motion. But like I would say, so but I don't actually trade the DXY, it's just to get the strength of the market. So we know that at this point the US dollar is actually rising, right? So once you go here, it pretty much sets you in alignment to looking for the pair to actually rise. See here, this would have been, this is the pair that I was actually looking to trade myself, and I missed my entry, which is, I'm kind of honestly pissed off about it. But I didn't force myself to just get into the trade just to get into the trade. You had this 1 hour candle here, this 1 hour low, this 1 hour high. Once again, you wanted to look for a bearish candle, because a bearish candle is what shows you the clear buy pressure. But let me clear this up a second. So the reason that I actually missed this exact entry is because, one, I had some technical issues that I was trying to deal with when I was setting up this stream, but also price did not actually come and sweep this low, right? Let's see. So price was actually very volatile around this time, and let me go back to, for this area, because it was so much volume, you got to go back, you got to go lower to the 1 hour time frame, not the 1 hour, the 1 minute. And then you'll see here on the 1 minute, it starts to make more sense, because you have your accumulation that you can see, which is pretty much any area of build up within the market, right? So you got to pretty much learn to see this as accumulation only, right? And then you're looking for, so what I was trying to look for is, because this area was a pretty, it was a pretty tough area to actually spot the maximum manipulation, I will say that, because if you look to the left, there is no extra area of liquidity for the market to potentially target. So because of that, I'm not actually going to be too too mad that I missed this trade, actually, because this was actually a slightly harder trade than normal to actually take. Because here, but still, either way, what you would have had is you would have had your manipulation. So it's ways to go about it though. Because the thing about CRT was once you're actually trading candle range theory, you leave room for context, right? So you could have just drew this area, right? Then you would have understood this as your peak manipulation, and then once you see price come back into this area, you could have potentially took it somewhere either around here or even after these candle lows. But my entry would have been somewhere here, and I would have been targeting this high to at least target a 1 to 2, and so I would have had my primary target already hit. One second, let me spread this out a little bit. Because the way I would have held this trade is price would have went to, I might as well just draw out the 50% from this area too. %50 within this range. So once price would have went to the 50%, so once price had hit this full burst, I would have went break even here and just held the trade risk free. And as we can see from that point, price would have never actually tapped back into my break even of the trade, and it would have continued flowing eventually until it hit our TP1, which would have been this target. But the key thing that really confirms this point of an area of entry would be that at 10:01 or to 10:02, once you go to DXY, right, at 10:01 to 10:02, you had this same closure happening here. Let me see what I'm looking for. Either this closure here that confirmed within, because price started to close back above this range, right? Or you could have waited until 10:03 close and you had this full candle closure that showed and completely confirmed that the strength was going to be from this point on back bullish, right? And once again, so the way that you have to approach DXY is from a completely observant standpoint, right? Like, you're not analyzing the DXY to predict it. You're only analyzing it to just see or confirm your strength on the opposing pair that you're actually trading. So around here at 10:03, you would have had these candles forming. So this would have actually confirmed that what you're actually seeing on USDJPY is true, right? And you can see price is now more than likely going to tap right into my maximum high, which once again, it brings me pain that I missed this trade. I'm gonna keep saying that because that's just painful, I'll be honest. But so once again, the way that I would have held this trade, well, I would have still been break even, and I probably even would have just secured profits maybe somewhere underneath this 50%, so somewhere underneath here. Then I would have just been trying to scale out and see if price hit this high within this session, right? And so since I missed this trade, I'm going to just continue and actually play along like I would have caught this trade, because I would have pretty much been in alignment with this overall direction, and USDJPY would have been the trade that I would have actually looked to take for the day. So I actually only look to take one trade per day if I'm right? And if I lose, I tend to give myself 2 chances. And from that so far, right, I have been able to have like a 76% win rate so far when I'm at the best of my game. And that has been, as of lately, if I'm being honest, I have been as the best of my game. Right now I am coming off of a 4 trade win streak, And with this trade, I just didn't take it, so I'm not going to obviously count that as a loss. It's just a missed trade. And so I'm pretty fine right now, because it's like I said previously, I won my last 4 trades, so I can't let this one missed trade really bother me too much. This is my exact setup that I look for, my exact 1, 2, 3 sequence that I look for in the market. If I'm being honest, I still got a lot more teaching to do on CRT overall, because just the way that I framed it to be so accurate directionally is because you have to have so many things in alignment with the timing and what you're actually looking for in the market. But so right now, my maximum target, so what I would actually do at this point, since we're coming back above here, is I would actually scale my stop even more to possibly somewhere here or here, depending on how I'm feeling, but probably somewhere here. So let me see. I would want to lock in. I would probably want to lock in at 2 risk to reward at this point. So if I'm going to scale, I would probably scale here and just call it extra, because our target could be worth it, because we're looking at a maximum risk to reward of a 3.4, and right now we are at a 2.6. And so I would actually probably just scale and put my stop here. Let me see. I will confirm the 2, so it would be here. Actually, I will probably trail my stop somewhere here, make this red, and then be currently floating. So it'll either be here or here, depending on how I feel about the market context. So in this case right now, I wouldn't really want to see price come back underneath this low of this high too much. And so based off of how it's already forming, I will probably have it here, or upright, just completely exit and take what I want. So that really the thing is, like, you have to approach CRT knowing your scale that you're going to be in the market, because what price just did here, by coming up into this 1 hour high, it just actually collected our maximum, not our maximum, but it collected our high external liquidity within this range, right? So which means that it's going to target our liquidity back underneath these areas. So it's going to target like areas like this. So it's going to target this. So that's why most likely it would be best to probably exit. But then, so that's sort of the thing about it. Sometimes the momentum is strong enough and it doesn't come back down. Sometimes if you get a higher time frame closure than it is. So that's pretty much how you will know whether or not to trust it, because what will completely validate this trade being bearish would be we have a bearish candle closure that comes underneath the previous candle from at least the 5 minute, or at least, yeah, it looking like just the 5 minute. And from the 3 minute, we're starting to have that reversal. We're starting to have that rejection. So stop price still would have been going in our initial direction, and so far it looks like it will hold. So far it looks like it's going to hold from this point, and it might continue on higher. That's what it looks like so far. Let me see. So a way that I would actually dictate that is you sort of like to go and look at the DXY hand in hand. So the DXY pretty much is above the 50%, which is a good thing. But the thing about the 50% is it can sometimes act as an area that price reverses from, right? Or it can act as an area that price pretty much like it. Let me go back. It will pretty much find a temporary support there, and then it will collect internal liquidity from that area, like it did here, right? It found this, well, in this case, it found temporary resistance here, and then started to collect internal liquidity, targeting back, going lower. And so the way that I'm doing this is I'm paying attention to the direction of price by the color of the candlesticks, right? I'm not really trying to look at so much what type of candle formed, just the overall direction of the candles, right? But so I see price came down into this area. It collected this area of liquidity just to draw something out, right? It collected this area of liquidity here, and then began to continue back bullish, right? And so it looks like from this point, price is actually going to respect this 50%. And by respect, I mean we're going to respect it at this point. It looks like it could respect it as a support level and bounce off of it and continue to target our high from this point. And then maximum, it could target this high here, but this is really trying to predict the market in a full hindsight. So I don't really like to predict DXY, but I will pretty much draw up a good analysis for the other pairs. So just to clear it up a little bit, this will be pretty much what I'm trying to look for, right? But the goal is to stay overall focused on the pair that you're actually trading. So I will pretty much still be here monitoring this trade, seeing how it goes. And then so the way that I would have had to go about these trades is, since I had these two as green, so I actually color coordinate my pairs from the pairs that are in the best alignment with my DXY divergence when it comes to candle range theory. And so what I did was, I like to do this pretty much before starting up my stream. It's just what I like to just do by myself and just start my flow of the day. So but I go through all of these pairs and check the divergences within them, and I gather up the strength of which pair is stronger in relation to the another pair, right? This is something that I can't really go too much in depth with from an explanation just from a live. This is more mentorship one-on-one. But so I gathered a lot of this data from all of these, from CHF, from JPY, from CAD, and I lined them up, right? And I understood that, okay, from the day, my overall bias for DXY was, I was looking for buys, because on DXY, right, and the thing about this is I was actually trying to look for buys way before price even did this full move out here for news. Because if you look overall on DXY, price was in a higher time frame CRT, right? And by CRT, I mean this 4-hour candle here. What price was actually in prior to the news event, I don't want to go too off topic here, but what price was actually in before our news event was, it was in this 4-hour range. I just went to the wrong side real quickly. There we go. Price was within this 4-hour range here. And yo, Steven, I'm not sure if you're new or not with the way that I trade so far. If you watch my CRT Foundation videos on YouTube so far, but when it comes to CRT, you always target the opposing candle. So this was a bearish candle, and prior to the session, or prior to NY session. So this was during London session. Let me see. Price was targeting these lows here. And since this was a 4 hour, you can pretty much go off of like a higher time frame. But during this, you will have a 1 hour here, not 1 hour, but you'll have your phase one. You had your peak of your manipulation here because price had. So in order to find the peak level of manipulation, you always want to look to your left and see the peak areas. So you could have pretty much had it here, or you could have had it here, and price actually tapped into this one. So you could have had either one, right? And then you have your 3, which would be whenever price is beginning to close above. So to be honest, if you would have took this, you would have been in profit for some while, and you could have just held it overall throughout. Well, not actually taking the trade on DXY, but I'm pretty sure if you had found the right pair, there was another CRT on that pair that would have been corresponding exactly like this. But so you would have had overall, like I was saying, overall price was already acting within this 4 hour candle range theory, right? Because today, Thursday at 8:25, price was here. And then you had this full explosion. I don't even know what to explain this as, but you had this high volume come into the market, and it completely fulfilled this 4 hour CRT high. So up until that point though, up until that event, price was in that 4 hour CRT. But so once that was over, I pretty much come down and you erase it, because now price is no longer within that active CRT, because that CRT is now fulfilled. So once that CRT gets fulfilled, you now want to look for another unfulfilled CRT, or you want to look for what price is going to do next, right? And so that's when pretty much I was here. I did take into fact that price collected this overall liquidity here. It collected this, and then so price was going to then now look for bearish liquidity. And so that would pretty much make the reason that price went back upwards make a lot more sense to me now, because you got to look at it from internal liquidity to external liquidity, and external liquidity to internal liquidity, right? So it collected all of this liquidity, which was this liquidity here was external liquidity, right? And so from that, it's going to want to collect internal liquidity within this range. And so that's when you wait. So with CRT it's all about waiting, right? Once you see this candle form bearish, that's a good sign, right? But you want to wait for that candle to completely close. Because the thing about it here is, right, if you have just rushed into this from the 30-minute time frame here at 9 a.m. And so this is pretty much the reason why 9 a.m. I didn't pretty much rush into anything or rush into the market, is because I seen that this candle here was not the candle to base the CRT off of, because it was pretty much the fake out candle, because the 1 hour looked pretty much exactly like this. And of course the 1 hour holds more weight. So when it comes to these forming, you always want to wait on the candle to close that holds the most weight, because you just would have been able to tell that from this point it was still 9. By the time it closed, it was 9:30. You say, okay, this candle is closing, but the 1 hour candle still has that same 30 minutes to actually close and sweep that low. And when I look here, the price actually swept the low. It did. Price actually swept this low directly at 10 too. That's the thing. So directly at 10, right? Price came, swept this previous 1 hour low. Let me make sure that was actually it. Let me see. I think it was, no. Yes, okay. So that was actually it. So once price actually swept this low, that was the very strong confirmation that price is now going to enter phase 3, which will be entering a expansion within the market. And so far we got our expansion from the market so far, but now it's what it does from this 50% is pretty much just up to the market. I mean, the 50% is always your first potential take profit area. And so that would have been the same here. But the thing about it is the way that I align the divergences, right? JPY was actually the weakest pair of the session, right? So that's why the CRT candle for JPY, for USDJPY, actually played out, and the actual full high was collected, right? We got our full high collected here, and we could be targeting our overall high because of the divergence checks that I do, right? And so that means that for DXY here, right, it was the same CRT candle, right? But price is not at our high. Price is at the 50%. Price reached the high of USDJPY because in relation to price actually going in its direction, like as far as momentum being directionally, right, the price was more so headed towards USD. And what I mean is the US dollar was going to the US dollar was going to rise at a higher rate on when it's compared to Japanese yen than it is just by itself, right? And so but the DXY ultimately obviously holds the more weight. Then I did the same thing to pretty much all the pairs. As you can see, I have my CHF divergence checks, and so CHF would have been secondary in terms of the divergence because price actually went to the 50% from this candle, right? It didn't hit the high either here, so but it still hit the 50% so far, and that's still valid, and it still has potential to target these highs. It's just when it comes to the dollar strength, right, the dollar was going to go up a slightly less in relation to CHF than it was for JPY, for example, because even though these both trades were valid, my JPY trade was the weakest across the entire session. So obviously if it's the weakest, then the US dollar is going to have the more potential to rise against it with, let's say, you can say as it will rise in this direction with the path of least resistance, right? That's pretty much how I like to look at it. It will rise in this direction with the path of least resistance. And so as we see here, that's exactly what it did. And so far, and you can see by the trades that I have read, is because there was no trade here in terms of the direction, right? And so I'm just going over a quick explanation of how I do pair the divergences, just so you are aware, and just for anybody else who watched this video back, because I am live recording this video. I'm gonna probably just upload it on YouTube as well and just let that thing go. But so for starters, the reason that this pair failed and the reason that it has a red mark, right, is because these pairs were actually strong. And what I mean is CAD was a strong pair overall, right? And so was EUR. The Euro was a strong pair overall as well. So if you're trying to look for a buy and you're expecting the US dollar to actually rise, right, it makes less sense to actually look for a same buy on these pairs if they're actually strong as well. You know what I mean? So just in terms of, so by doing this is actually how you avoid trying to take in trades that will fake you out, and you actually avoid trying to get into trades that offer a less worthy risk to reward, right? And so obviously, if you align yourself with the strongest and the weakest, you're going to have more than likely the highest risk to reward play out in your favor, right? Like I've seen my trade entries go from, I think it was actually in the last video that I recorded, but I think I took an entry on GU and price ended up going to a 22 risk to reward from that same entry within the next day, because it never went back to that area, because the directional strength was so strong for the day that it carried over, right? But so like I said, if you was trying to look for a trade here, you wouldn't have anything because these pairs was too strong. So if you were trying to look for a buy here, you don't have it, right? CAD is obviously stronger than the US in this case, and so there is no opportunity to look for a buy here at all, right? And so this pretty much helps you filter out this pair and avoid trying to take a unaligning trade here. So that's why there was pretty much nothing here, right? Once you see that, there's nothing here. That's it, right? Now you had this pair that I had marked out as yellow. It was yellow because it was like a mid pair, which means it was stronger than some, weaker than others, and it was still pretty much weaker than others overall. But it was 50-50 today, right? And so what you will want to look for on this pair, if USD is rising, you will want to actually look for sales on this pair, I believe, right? If I did that right. So today, if you were actually trying to look for sales, you would have to actually take them. Well, there's actually nowhere to take them. So if you was trying to take them anywhere here, it would be forced out as well. So this area being yellow was yellow for a reason, right? It was a reason because it might not have a trade that's even worth taking here. There's nothing worth taking here overall as well either. And now you go here. Now for this pair, I actually forgot that I actually drew this out. So we could be targeting higher prices from this point. I drew this out as just like an example because this pair is red, so which means it's a strong pair overall. But it might have the potential to potentially play out still, just because price divergences aren't always, when it comes to strength, they're not always 1-to-1. But this will pretty much make this trade still iffy. I won't really look to actually count it, just because when it comes to the directional ranking, it's two half and half, right? So that would have stayed red. And so the only thing that you really look to actually pay attention to is the ones that actually match my divergence alignments, which was USDJPY and USDCHF. These were the only two that was completely matched, which is why they're the only two that are green. And so from that point, you have this here. Price is now still overall in a bullish direction because we are technically still within this 1 hour CRT. So the way that I look at price is I look at price from a completely fractal viewpoint. And in order to actually help you understand the way that I trade price and the way that you can actually keep your eyes in alignment with the way that I do, so that you can stay accurate overall, is I actually put laws into CRT, and I haven't actually taught this live on YouTube, and I'm gonna actually probably keep this in I'm gonna probably keep this for my mentorship students primarily, if I'm being honest, because I have these laws. Because once you understand that, if you are interested in trading CRT, for example, right, you have to understand that you're not just trading a strategy. A lot of people, they get into CRT and they want to treat it like a strategy, but you can do that, but if the thing is, in doing that, you will find that you're more than likely inconsistent if you're trying to trade CRT from the strategy viewpoint. And because that's what I did myself at one point. But the thing about CRT and what I've done, and even to get to this point, you have to be able to evolve as a trader. And I had to actually evolve and always figure out why something didn't work, or why did I miss something, or just evolve the way that I approach the market overall with CRT. Because I realized CRT, it cannot be a strategy because of just the name, right? Candle range theory, which means it is a theory out of the market itself, which means if you want to be profitable out of a theory, you have to build a framework that keeps that theory in check and keeps it working. So what I have done, actually, this is actually very recently, it just came to me over the weekend, to pretty much line up like the perfect set of candle range laws that, if when you always following them in alignment, it will keep you in sync to candle range theory. It keeps you in alignment to what candle range theory really is. Because when it comes to trading and just spectating the market overall, a lot of traders, they view the market completely differently than what I just broke down with candle range theory. And so the thing about that is, you have to be okay with pretty much sacrificing analyzing the markets from a completely different perspective than everyone else, right? You have to accept being able to see the markets like that for your ability to have increased level of precision out of the market. And so that's why when you see CRT and you see it used effectively, it looks like this. And when you see it effectively at first, it won't, like, it pretty much looks like something that you have to adjust to, because the way CRT operates is naturally it's polarizing. Okay, so what I mean by CRT being polarizing, so there's actually a law that I have put inside of this that actually dictates why price is polarizing like this. I might actually be able to find the law name, but I'm not even going to go there. But I do have it formed in the laws, and the laws are formed in direct they are formed in direct alignment from what's most important to actually viewing the market correctly, right? So if you are new to actually understanding CRT, you got to understand that you will have to unlearn a lot of things that you were taught previously when it comes to understanding the market, because a lot of people will have a completely different framework, and that's just the way CRT is. And that's really what I actually had to learn myself overall too, because I realized that on my best trades, when I take, like, for example, I would have been on USDJPY, right? And it probably would have already been time to get out of the trade, and that would have just been my trade for the day. So I'm not going to actually force anything anymore. Let me see here. Yeah, because on DXY, price is actually starting to reject the 50%. So I would have saw this, and I would have just exited out the trade at a 1 to 2 risk reward at 2.26. Or if I was still trying to hold the trade to my stop loss area, I would have just let price stop me out at a 1.8 risk reward, 1.78. And even still, that's still a very good risk reward to compound your account off of as well. So just for when it comes to actually trading prop firms and scaling your account, you can actually scale your account off of just one share. Because the thing about CRT is, once you're in profit for the direction, price should not go back to your stop loss if you are correct. So that's why it's important to actually trail your stop at least, or go break even. So that way you're actually scaling and compounding your account. Okay. So like you could have just went break even, or you could have just scaled your account, or scaled your stop. You would have got stopped out of here at a 1.8. That would have still been a good risk reward. Or the thing about it is the maximum target is not yet invalidated fully either here, right? Price could still reach this maximum target, because I have been there where I've witnessed plenty of times, right? You will have your CRT candle, your high has reached, then you will have price sort of close back underneath here. But the only thing price is actually doing here, right, is it's collecting internal liquidity that will be the next fuel to bring price back up higher so that it can now target this high. But because all these points are fuel, right? So the way that I will look at this is something like this here. This is the first area of fuel, which also happens to be our CRT 50%. So either this area holds or it doesn't. So now we have to pretty much wait and see if this area holds, then price could now begin targeting our highs back once again, or not. But it just depends from where we are right now. But if I was in this market predicament, I probably would have just went ahead and exited our maximum high at this 2 risk reward area, because on DXY, if you look closely, you can see that it was beginning to reject. So once DXY begins to reject, there's nothing you can do, right? So that's why once you had this 5-minute close around 11:10, or let's say once you started to have an engulfing back underneath this 50%. So once price started to close underneath this 50% around 11:12, or if it was on the 5-minute time frame, could have been 11:15, could have been this 11:15. And so just to correlate that here, 11:15 would have been here. So if you would have tried to wait that long, you would have been stopped out at the low. So in order to take the full profit of this high, this is where you pretty much have to make a discretionary trader decision, because that's what you are when you're trading CRT, right? You got to be able to make your own decisions on the fly. And so if you just was okay with securing your 2 risk reward once price came up above this high, you could have just done that. And or if you wanted to just let price go and just see what happens, you would have done that and got stopped out here or wherever you were trying to look to scale the market. Or there's always the third option, which is the break even or nothing option, which is you go break even and let's say you are trying to target this high, you just stay break even no matter what. As long as price doesn't go back down to your break even and it comes back into these internal liquidity areas like it is right now, you just stay break even and you just go, right? You target your highs. Now that's valid as well, but it's the thing about that approach is once you go a break even approach, you have to pretty much you have to go that approach more often than not, right? With the scale approach, you pretty much you're compounding, or you're pretty much more so compounding your account with more guaranteed wins over time than going break even, because then, for example, you would have left all of this with nothing if price actually does come back down, right? So you sort of got to just choose your approach with CRT. And from here, it just looks like that might be just it for this trade. Like, this would just be a complete trade for the day, a complete trade for the session. Because since I like to just primarily trade, I try to trade the trade of the day. So one trade throughout the entire session is primarily what I'm trying to look for. And so this would have pretty much been that one trade, and it would have won overall. And so that would have been it for the day. Most of my trades, they are probably 2 hours, 1 hour, not by purpose. It's just by how the trades end up playing out. For example, it might be one day where I might end my stream for the day, but I might still be holding the trade, but that's just because that particular trade is just taking longer to play out. But this overall CRT was based off the 1 hour time frame, so that's why this pretty much is starting to lose weight now, because the higher time frames hasn't really made their choice, right? For USDJPY, you do have this level of accumulation, manipulation, expansion overall, which started this whole thing. If you were seeing this from a larger time frame perspective, right? But like I said, once again, let me see. Just to talk about what you could have actually caught this low here from this high. If you were actually paying attention to the market around London session, you had this 4 hour candle sweep this, and then you would have had this complete candle here, had this low, entry somewhere within that, and you would have been able to ride it out all the way if you would have liked, because then price is targeting our highs. From that point, it would have targeted this high. Now I think it's targeting this high, but you have to wait. Now you have to wait because of this event that was happening on earlier this morning. So when it comes to analyzing with CRT, that's pretty much it for right now. That trade would have been in for the day. And let me see. The key about it is you have to approach the entire market from a fractal view, right? That's another law that I have into CRT, because it's the only way that you will be consistent. Is you have to understand that the market is fractal. So at least as far as the buys, that's completely it for now. Maybe I don't think we have more opportunities of lining up for the rest of the day. Let me just do one more look and see if there's actually a potential for today. See, the thing about price today is it might actually be just rejecting for the rest of the day, because price already came and collected previous highs, being here. So when you look at this from a structural standpoint, yes, so here's the thing. I can see price actually shift momentum now. So that would have been for the first half of the market session. And then you will have this flip now of 1 hour high here to this low. That's the 1 hour, yeah. So I might have missed another entry opportunity right now, to be honest. And this is, if I did, I'm not going to force it again. This just shows the raw side of trading and how important your timing is when it comes to CRT, because in order to catch my optimal timing, right? Let me take this off so it's not confusing. in order to catch my optimal timing of the market, I would have had to begin to look for either sales or buys from 11, I say from 1109 and beyond. From 1109 and beyond. And by the reason I say it so specifically is because that's when DXY had a candle closure that engulfed underneath this low, and it was showing you had your first sign of accumulation. You will have your first sign of manipulation here, and then you have your beginning of distribution coming into the market, right? And so if distribution is actually coming into the market, prices obviously going to actually sell off and begin targeting this low. So it will actually target this low. All right. You will have it looking, it will probably look something like this, if I'm not mistaken. Let me see. Just want to make sure it's exact. One, two. Okay, so it was from this point. So you got your 1, 2. This would have been your, let me draw out the 50%. So once again, if I react now, it'll be late once again. So, and I don't want to be late. So the thing is, there's nothing I can really do from this point. All right, I could just watch the trade, watch how it plays out, unless price does something different. But for right now, we could have potentially began to show a shift in momentum. So like you just said, previously I was trying to look for buys because the DXY was rising, which it was, right? The trade that I was trying to look for overall, that trade's target will hit. So since that trade's target was hit, that's it for the whole trade, or that's it for the entire trying to trade for this direction. So with CRT, you have to be able to identify the directional shifts within the market. So this was the first directional shift that buyers coming back in. And so if you pay attention to here, this was the directional shift to buys coming, not buys, to bears coming back into the market, at least for now. It doesn't have to be for the entire duration, but like if you was looking here, you had a 30-minute CRT, right? This high was swept, then it was targeting the low. Now this low was swept and price could be targeting our high, but on DXY we have to be having that same thing happening, or else the trade would not be valid. And so what I mean is, right, so that was just a example. So price actually already went down, and like I said, overall, me personally, I'm still trying to look for buys within the market, because I feel like the buys is the side with the most momentum. But also, it could just be too late and the opportunity might have already passed. And I'll say that because it all depends on what happens within this next 30 minutes. If this low is respected from, then price could potentially begin targeting higher prices, and we can start targeting highs once again. But when it comes to a trade like this overall analysis is off, right? That analysis is complete. It completed itself already, right? So now you got to start fresh. You know, the high was already reached, etc., etc. Let me take these off. Let me go back to the 1 hour. Okay, now what do we see? The 1 hour don't got one here. The 30-minute got a potential CRT. So I want to see a potential corresponding CRT. And you do see one potentially here. I just wonder how late I am into this trade. Here. Here. You have it here as well. So you have it appearing here as well. I do want to partly check my divergences to see if they're still even in alignment with them being weaker. So base here. Euro might be rising against that. Pound might be rising. So it's still a weak pair. I'm just not sure. Not sure if it's what we want to look for. These pairs. Actually a bit mixed. Thing about this is you had all this liquidity collected. You had this collected here. So pound is actually stronger. CAT is stronger than JPY. So yeah, JPY is the current weakest. And now we see. Let me zoom into this a little. We might actually have a potential entry opportunity coming up. I just want to make sure DXY is still in momentum. So what I'm thinking is this may be an area where we just wait and and see, because even though price swept on this 30-minute candle, it actually swept the low. The way that it swept is pretty sus, but it was pretty quick, but it could still hold. But we just gotta wait and see how price actually holds within this area. The 3 here, 2. So might actually have an opportunity that might look something like this, and it's a late entry, but I'm gonna just take something like this right now. Actually, I'm not gonna lie. USDJPY. The thing about this is I wasn't as planned and set up for this trade as I was supposed to be. Yeah. So I'll put my stop loss at 11 pips actually. Ratio. Why do I gotta re-sign in? Okay. 1 second. In order to trade on my main account, they're telling me I gotta re-sign in. Like, you see how inconvenient that actually is? Really just threw off my entire vibe, because now I just entered the trade on one of my accounts, but the other account that I wanted to enter the trade on, I gotta relog into. So as long as price don't actually stop out anyway, I might have time. So maybe that's a savior. Actually, the thing is, if DXY comes down, then that trade will be invalid if this area does not hold, which is possible, because what actually might hold is the 1 hour after this. Maybe. I feel like the 1 hour candle is the candle that will hold more weight once again. So this 30-minute candle is just like a candle to be aware of right now. That's how I'm taking it. And then the 1 hour candle, since it's within the next 12 minutes, will dictate the actual CRT move itself. So that's actually a good thing I was not signed in, I guess. Let's see what happens. But let me actually sign in real quick anyway. But if the DXY candle actually closes, if this candle closes back up here, then that may be enough to show that price is going to be bullish and target this high. So okay, I was able to sign back in finally, and I might have been able to sign back in just in time because this is looking to be respected. So let's see. Yeah, so I'm gonna take this trade now. I actually made it. It wasn't at the best time that I would like, but it's still at a time that's valid enough, I guess. And then we see. So I am in profit now already. But the thing is, let me draw up the 50%. Oh, one thing. So price did not reach our 50% yet. There we go. This is the 50%. We are still in this one push now. So depending on how price actually reacts from this 50% will depend on what I do next. Because right now, since I am in profit, I don't want to just let the market just take it right back. Especially, like I want my win streak to continue on. Hopefully I don't jinx myself. So knock on wood for me. Yeah. But for now, let me actually just place my stop losses. Okay, placed at the same levels currently for now until price gives me the reason to go break even. Just in a smooth ride now. Hopefully the market continues smooth. At least for right now. Let's see. That's what we want to see. Okay, we start. Okay, now price just went into the 50% area. So I might go break even. We're gonna see. I want to see how price does here. I want to see how price reacts at this minor high here. That's what we want to see. I actually didn't think I would actually find a trade after my first entry opportunity missed. So here's the thing. My first trade opportunity was down here. So you can just see I slightly missed out on profit. But since the market is still going the same direction, I still stuck with my bias. I stuck with the same strategy, the same framework that I used to trade. And here we are. Still just got to see how price holds from this point though, because this now is an important point. How price does here is very important. Let me see something. See, the market seems to be it didn't confirm anything yet, so I don't want to say it. So far, we still got potential to continue holding. The thing about it though is we are at a point of decision within the market, because price is at a 50% here, and on the DXY it is on the 50% as well. It pretty much tapped into it or came very close to it. So these are just areas that, you know, the price is going to either reject or it's going to bounce. Some sort of thing is going to happen, and so we just got to see ultimately what price decides to do around this level. So you want to see this 30-minute candle close. It's about to close very soon. This will have to be just viewed from the 30-minute lens. So yeah, it would just look like this. It's not the best trade by far, for sure. I feel like I already missed the primary trade. So what I'm going to most likely just do is I'm going to just go break even here, and then just let whatever happens just happens. Because I feel like this is not really a trade that's worth just allowing it to come all the way down, but it's worth still holding. So I'm going to still just go break even though it's starting to go back my way a little bit. Just go break even, lock in. So that way the profits are locked in and secured at least. And, well, a loss is at least avoided. So I just went break even on the trade. Now, it does feel good in this scenario to just be risk-free, at least. Let's see what happens. Perfect. This is exactly what we want to see right here. This is exactly what we want to see. I want to see how price taps into this high now. So let's see. Let's focus on this. Now this trade is going very well. This trade is actually going very well. I will say so. Price tapped into this high. So now we just gotta see what it's gonna do. I feel like it's a good chance it's gonna respect this high and target this here. I feel like it just has to, but at the same time, you don't want to force it. I don't know. You know, I'm gonna just trust myself and trust my history lately, and so I'm gonna just let this do its thing, man. That's the maximum, but I might not target this area, but it is still labeled. We'll see on the momentum that's in the market. Like if price begins to somehow pick up a lot of momentum here, and then it picks up and it takes this high, I might just exit here, or I might just scale and then see if it touches this maximum high here. But we shall see. Let me take a look at DXY very quick. So see, the DXY now went above the 50%, but it depends on the DXY's momentum overall as well, right? The DXY could decide to turn bearish, or it can continue and target this high, because this low was already swept when it came to the 30-minute time frame. This low here, price swept this low. Oh, see, look, now the DXY is rising, so I guarantee you when I look on here, we should be rising as well, and we did. So the trade is doing well. We are at a 1-to-1 pretty much. We're on a 1R, which is still good. Trade is at break even, so far so good. Obviously it's not over until the trade is confirmed and exited, but not bad. You really just want to see what price does here. I mean, I believe that price has the chance to overall pick up, and so maybe that's what it does, but at the same time, maybe it's not. Let me just see if this means something here. Now you got price rejecting from that level, so it depends, man. This area is definitely an area that depends. If we get a full 5-minute closure though, that might just be the sign that it's over. If this bearish candle completely closes past this bullish candle, that might just be the first sign that, okay, this CRT phase is over. But let me take this off. For right now though, the fades is still in sequence, but just gotta see. Go back to where we are here. But the trade still has potential, so it really been coming down a lot for me is not exiting too soon. I feel like that's my biggest problem now. It's like once you get down, being patient enough to time yourself for the entry, then you have to start being aware of when do you actually exit at the highest point, or not even that you have to exit at the highest point, but at the point that you capitalize the most off of the trade, you know. Now we just floating here. If we stay above this line, that'd actually be good as far as showing the sign of momentum, but we have to see. I feel like it'll probably be decided in the next 5 minutes once this 15-minute candle open, or this 10-minute, because the 5-minute candle is bearish, but the 10-minute candle is still bullish. Like it's been, the 10-minute candles have been printing straight bullish candles, right? You got this one, this one, this one, and this one. So it's a good chance that it will print another one, right? And that's just going based off of probabilities. You know, the market is all about probabilities. So if you see it happen 3-4 times, chances are it might happen again. So that's what I'm trying to bet on. And so prices more than likely should be targeting this high. And I'm just perceiving the market from the market being fractal once again. And so when I view the candlesticks, I view all of them from the same direction. I feel like a lot of people get that mixed up when they're scoping through time frames. They just start viewing things completely different. But so, and that's why I'm so accurate overall as well, is because I'm seeing the actual points of the market. So far so good when it comes to this. Let's take a look. So this is what we want to see. DXY is forming a bullish candle, so that's showing signs of getting stronger. And if that's getting stronger, then USDJPY will get stronger. So that's good. Let me look here. You just gotta let the market do its thing, man. Look here, can see it back here. Price is starting to show rejection. So let's see. This could be a strong candle. I wouldn't be surprised if the trade that I actually did take is not the trade that goes towards the high, because I missed my best trade. But hopefully, since I treated this trade the same as I would my first one, hopefully it plays out like it, you know. Hopefully. So you got this, and then you have this correlation here. So right now, price still looks pretty good, honestly. It's above this overall high, so that's a good sign. So we just gotta see if price maintains. Probably will look from this perspective. The major volume will come in once this 15-minute candle closes, though. So I'll probably just stay here. It's the time frame that's the largest with the most volume that can come into it. The 30-minute don't close until another 16 minutes. So this 15-minute time frame shows a lot of the strength. And so as we can see for right now, price is beginning to reject. But I want to see how the 15-minute candle opens. So I'm going to wait and just let this see. About 10 more seconds. All right, now let's see what the price action does here for a bit. Let's see. Let's just keep watching. I'm gonna go grab me something to drink very quick, so I'll be right back. All right, I am back. Now you can see price actually is targeting our high. This trade is in profit and we're doing good. We're floating. We might actually hit our TP. So if we hit our TP, man, this would be my 5th win in a row and I would just be blessed. I didn't take any trades all week today except for today's trade. So this will be my first trade all week. Man, I've been really locking in, man. Listen, if you're watching my YouTube channel, make sure to join my Discord, okay? You can either join my free community or my paid VIP community. But just look at this trade, right? This trade was just taken live and it was in profit. So just think about it, man. If you pay to get in my VIP trade and you take the same trades as me, you're going to make that money right back. You got to just think about it from a business perspective, and you always have to invest in yourself, right? Like me personally, I know I have actually mastered the skill of trading. I have actually mastered CRT. I wouldn't just come out of here without actually mastering CRT, right? So I definitely recommend that you guys join and get into my VIP Discord, my premium Discord, where you can watch my live trades, or even if you want, right? I recommend that you go ahead and enter my mentorship service. There's so much more to CRT that a lot of people can't really get taught, and there's so much that I can't really teach through these videos. And once again, the thing about CRT is my personal edge, and so as long as I evolve, CRT will evolve as well. And so just previously, I've put together the laws of CRT, right? And so these are laws that pretty much ensures that you are always in direct alignment with the market. Now, as far as right now, I'm not really sure if I will go public on these laws and how to actually trade these laws in accordance to CRT, so that you can do what I just did here, right? The only reason I did this was because I followed all of my laws, right? And I followed all of my laws at this point subconsciously, okay? Because I did it so much. So I'm not really sure about going public about teaching my laws, but just to go over one law, for example, the first law is let me see. Let me go back. I actually have all of them for. So, for example, actually, since I just go over this one, actually, no, I don't want to go over that one. See, I don't really know if I want to go over them yet, because in these laws, it's just complete sauce, y'all. I'm trying to tell you, man. Like, I don't even want to go over this law right here. I'm trying to find one. Okay, here we go right here. This is the only one that I'm going to drop, right? This is law 7, the law of directional liquidity fulfillment, right? I'm not going to go too in depth into that, but you can just see that law is in play right here, right? That's all I'm going to say. You guys got to really sign up to the mentorship to really find out about my laws that I've created of the market. And I'm not trying to toot my own horn, but this is not something that most people actually do. Most people do not create laws out of the market, but this is something that I was able to do out of just my years of experience. So I was able to essentially create principles out of the market and learn to apply them, because the thing about principles is they are always working, right? Principles, it doesn't matter who you are, what you do, they're just always working. They're always in play. Now, that you can see here, price just hit my target. Now I have to actually decide on what I want to do. So I'm going to actually pay attention to what the market is doing right now. We have our maximum area that is at a 2.9 risk to reward. So I could target a 3, or I can just take what I got at a 2. I don't know. But if the market just jumps up, then hey, please be my guest, right? Be my guest. That's what I'm looking to see. Let's see. This is very good, man. It's like part of me want to just take it, and then another part of me want to just be like, what if I just wait like 2 more minutes and then the target just get hit, right? So it's like, it's that internal tug and pull that I feel right now. But let's see. Price might actually hit that high though, man. If price hit this high, then that would be a trade. This would be my first trade that I was able to catch the full maximum high on the camera on live in a while. I just always take the first high, but now if I could take the maximum high, well, no, I think my third trade, I actually caught the maximum high. So I guess it just sprinkled in here and there, really. But I do see that on the DXY we did actually max out at the high, so I might actually take out what's here. I'm gonna pay attention to the DXY very heavily here and just make my choice. If the DXY starts going down, I'm gonna probably exit, but so far the DXY is rising, so I'm gonna try and see, because the DXY has no more liquidity left to target, so I'm gonna just exit. That's it for me. I just exited, and I exited at somewhere around here. So I exited around a 2.3. It's perfect. I wish I would have caught it $4 more, because then my account would have been at an equal number. But nonetheless, this was a win. Another 2 risk to reward win. See, if I actually try to scale, I'm not going to put too much focus into it now, but if I actually try to scale from here to here, then the price that trade might still be valid. But honestly, that would have been it for me, because the momentum started to turn, and so I don't want to hold this trade any longer than I have to. Now, it still is possible that the price can target this high, but I just don't see the reason to stay in that trade. So that's going to be it for this live trade today, guys. Listen, make sure to join up in the Discord so you guys can actually be participating in these live with me. Listen, it's worth it in the Discord, right? Because as you guys can see, this was a winning trade, completely live, broken down. And if you were with me in live, you could have actually took the trade with me and profited right back, you know. But yeah, I'll see you guys in the next video. Make sure to actually share, subscribe, and like this video if you found this video valuable, if you found this video useful. And yeah, so just very quickly as well, I'm going to be posting a lot more CRT content on my channel, but the way that I'm doing it, okay, is I want CRT to be perceived as its own market universe. Like I want it to be filled with its own thing. So the way that I'm going to start to make my videos, as you guys are going to see, like, because the way that I see the market is through CRT. And look, seeing the market this way is worth it, man. I just got a winning trade, 2 risk to reward. Listen, I'm happy, right? And the thing about it, I missed my best trade. My best trade was here, and this trade would have, I think, gave me a 1 or 3. Let me just go over it very quickly. Trade would have took me from here. Well, it would have took me about a 2 risk to reward as well. So it's not too much of a loss, actually, right? Yeah, it's not too much of a loss. If we're being honest, it's not too much of a loss. It's not a loss at all. So there you go. I guess I would have been done for the day sooner, right? I would have been done from 9:54 to 11:06 instead of being done from 11:30 or 11:42 to 12. So it's just a slight time difference, but that's how timing goes in the market, right? And that's why it's important to learn CRT. But that's going to be it for this video, and I see y'all in the next video. And make sure, like, once again, man, join the Discord community, join the community, because listen, you don't want to miss out on learning CRT. So I see y'all in the next one. Peace out.